Since the beginning of April, we have seen Bitcoin plunge down as far as 47%, now currently sitting at about a 38% decrease from this recent high in April. And of course, this begs the question, why is it that Bitcoin is plummeting? Well, it's because the stock market is also sitting on its 7th red weekly candle in a row, correlating heavily with the S&P 500. If you've been following stock market news, we've recently seen a lot of people discussing that the bear market has officially begun, or that we are close to a bear market threshold, which has kind of turned on my contrarian brain. And to me, it seems like these are ripe conditions for some kind of reversal or some kind of bounce, even if it's just in the short term. I do think it's possible that we could play out some kind of rally for the S&P, and Bitcoin would then correlate heavily and also allow for some kind of rally. And we're going to be discussing this potential bear market rally and how this could all play out going over the next year or so into the halving. All of this and more in today's video. What is up, guys? Welcome back to the channel. My name is Kevin Svenson. Today is May 22nd, Sunday. We are just hours away from the weekly candle close, and I want to discuss Bitcoin in the short term and the long term in this video and discuss what things we could expect coming up next. And before we get started, definitely subscribe to the channel and be sure to smash that like button. So over the past several months, we've been discussing the downside risk for Bitcoin. We were talking about this really since March. The possibility that we were in the denial stage of the market, downside risk, weekly RSI fractals. Talked about the Coinbase weekly volume on multiple occasions and that the bears did take control of the market. And all my regular viewers know that we talk a lot about the fact that Bitcoin is correlating heavily with the S&P 500. And we see that the S&P is now down 7 weeks in a row, pretty much doing the same thing as Bitcoin here. Extremely high correlation, almost a 90% correlation here for Bitcoin and the S&P. But what I'm noticing is that if you're looking at the S&P on the weekly chart, we are now coming up on levels on the RSI to the 30 level, oversold levels. We are hitting them now, and we have not hit levels this low on the weekly RSI since the beginning of 2020 during the COVID crash. And before that, we never hit levels this low since when? Just at the end of 2018 when Bitcoin hit about 3,100, which correlated heavily with the S&P back then as well. So we're coming up on these extremely oversold levels for the S&P, which is starting to turn on the contrarian side of me as I'm seeing everyone become bearish, people talking about a bear market, that we're reaching the bear market threshold and all these kinds of things. It seems like we are due for some kind of rally, some kind of bounce. Historically with the S&P, usually when we get to oversold levels like this, as we're seeing now, we don't spend all too much time at these low levels on the RSI, and that a rally would be around the corner. And I think that that is likely due here. Just as everyone is getting bearish, now's the time to maybe be looking for some kind of rebound, some kind of bounce up for the S&P. And looking at the weekly MACD for the S&P 500, we're also starting to see that this is getting way overextended to the downside and that a reversal is likely imminent at some point soon. And on top of that, from low to high, from that COVID low to the bull market high for the S&P, we've also seen a retracement back down to that key fib node, that 382 Fibonacci retracement. We have just perfectly tapped that at the end of last week. So we're at a major fib node. All of these signs are telling us that we could see some kind of reversal in the not so distant future. Let's pull up our line charts here. We can see that, since the end of 2021, we've had an extremely high correlation. And the correlation between Bitcoin and the S&P has only gotten stronger in recent times as the market has become bearish. Bitcoin normally correlates the most with the stock market when things are bearish. So at this point, seeing a multi-week reversal to retest some of these previous support zones as potential new resistance for the S&P seems like a strong possibility in my opinion. And so what does this mean for Bitcoin with this high degree of correlation? Well, it probably means that Bitcoin would also follow the S&P on some kind of multi-week reversal back to the upside. Now, of course, I don't know the future. Anything is possible, right? The S&P doesn't have to bounce. I'm just discussing what I think is most likely, and I'm not a financial advisor. But if the S&P did play out a rebound here in the short term, well, that would likely mean that Bitcoin would also play out some kind of reversal back up to also retest some resistance. Now, what are the targets that we could be looking for on a potential bear market bounce? Bear market rallies are usually very violent to the upside, and these bounces can provide some pretty good trading opportunities, even if we are going to be going lower later, which I also think is a strong possibility. If we take a look at Bitcoin here and we look at our downward sloping resistance line, we can see that Bitcoin is now in a downtrend. I mean, that's been the case for half a year now. For literally an entire half year, we have been on a straight downtrend with lower highs and lower lows. And as they say, the trend is your friend until the end of the trend. And we currently do not have any signal that this bear market has ended yet, right? So we are still in the downtrend. So we got to be mindful of the momentum, where the momentum is in this market, which is currently down, and that we're likely, going to be maintaining that downward momentum until proven otherwise. So we have this downtrend here, and if we were going to get some kind of rally in the S&P where Bitcoin would correlate, it could mean that Bitcoin tests up as high as the downward sloping resistance before looking to come back down to the lows later on, which would mean that we could be seeing the price come up to, previous support zones, this area right here, which is about 36,200, these candle close zones, about 37,500. These are the types of areas and the types of price targets that we could hit on a short to medium term rally before then continuing the downtrend and breaking out of this downtrend at a later time. This is the type of price action that is very characteristic in a bear market. And there was something else I posted on Twitter, this trading sentiment quick guide. And like I was saying in here, in an uptrend, when the crowd gets bearish, it is an optimal buying opportunity. So for example, back here, when Bitcoin finds that low at 30,000 and we rally up, on this dip right here, people were getting bearish, but that was your optimal buy zone for the next leg up. And also on the contrary, in a downtrend, when the crowd gets bullish, it's a sign that selling or shorting is the optimal trade. Use accordingly. So selling and shorting would be the optimal trade in a confirmed downtrend. If we were to rally up, very likely everyone would start to get bullish. People would say the bear market is over. And this would be an optimal place to take short-term profits, maybe take some short positions, or just look to reaccumulate more later, right? So that's the kind of stuff I'm looking for right now. We can't confidently say that the downtrend is over until we actually break out of our downward sloping resistance, because that's what defines a trend. So if Bitcoin's going to rally up to resistance, we would have to be very mindful of the fact that that could be a lower high. We test lower later and then recover going into the end of the year. And that brings me to this tweet that I made just the other day. This tweet ended up getting about 1,000 likes, so I appreciate all the support there on Twitter. Definitely follow me on Twitter if you don't already. And this was what I was saying on Twitter. I was discussing how I think that, this is a Bitcoin chart that depicts the scenario in which the current downtrend is maintained until landing at the 200-week SMA going into the end of the year. And then after that, we would move up going into the halving. And this is what I think is the most realistic scenario. Just like that downtrend we were just looking at, Bitcoin may be looking to rebound with the S&P in the short to medium term, meet that downward sloping trend line, and then look to have one final test back down to the 200-week moving average. Looking at this yellow 200-week SMA, this is the area where Bitcoin has most commonly found bottoms in bear markets throughout its entire history. And currently we're sitting pretty damn close to it. We didn't necessarily reach it just yet. But again, this downtrend here is still our friend, right? The trend is your friend until the end of the trend. And we can't confidently say that the downtrend is over until we clearly break this line. So expecting a little bit of play in this range before one final test down to end the bear market is possible. Now, a lot of times in bear markets, pain, right? Maximum pain comes in the form of sideways action, right? And this is, you know, in a bear market, it's very unlikely that Bitcoin would just instantly recover and go to the moon. Very unlikely. Of course, maybe if the S&P instantly recovered and went to the moon, which is, I also think is unlikely. It's more likely that Bitcoin would spend time at low levels, maybe hugging that 200-week SMA before then breaking this downtrend at a later date, closer to the end of the year, and then looking to build back up going into the 2024 halving, right? And this is kind of the scenario that I find to be the most realistic expectation based on Bitcoin's previous performance, based on the scenario that we are currently in the stock market, that if this is a bear market, yeah, we could see these short-term dead cat bounces followed by maybe lower prices later, and then a recovery going into the end of 2023. Stuff like that is kind of what I'm looking for in the market right now. So that would mean that Bitcoin could test up to that 37K level and then retrace back down towards the low 20K range before then sort of just ranging in between that zone and recovering over the next year. And a lot of people disagree with me. They say, you know, Kev, why aren't we just going to instantly recover to the moon, right? And you know, that's just usually not typical in a bear market. The way that, you know, Bitcoin behaves, the way that these cycles normally play out, you know, after we break that major support, like in the 2014 cycle here, we spend, you know, a long time moving down, many months, years going sideways, and then recovering later. 2018, the orange line, that 6K level, we spent the better part of a year holding that, coming down, then going painfully sideways to then recover later. Bitcoin has just now found that breakdown level. So seeing a bounce up, one final test down before that painful sideways action, and then a recovery going into 2023. Well, that to me seems like the most realistic expectation to have right now, until otherwise, you know, until something else changes or we get some kind of other signal. We are still, you know, really deep in this downtrend, right? So I don't really expect all too much bullish action, just a lot of volatility and sideways action going into 2023, and then a recovery later on, right? So that is pretty much it, guys. I hope you enjoyed this video. Definitely smash the like button and subscribe to this channel if you're new, and be sure to also join the Patreon if you want to support my work and get extra content. And I'll see you guys in the next video.